With all the divisions in politics over what seems like everything, you might have missed it this week. When Congresspeople on both sides of the aisle came together to do one thing: roll back Dodd-Frank. The Mortgage Choice Act, a bipartisan banking bill, was passed in the House on Thursday, March 8th. Next week, the Senate will also look to pass this bill that will make big changes to the financial regulations in the U.S. by rolling back some parts of the Dodd-Frank Act. Let's take a moment to talk about what that is. Dodd-Frank was a premier policy win for the Obama administration. Okay? It was passed in 2010 as a response to the banking crisis. You know, the one where all the big financial firms and banks held bad investments, dressed up as good investments, and ran out of money when no one wanted to buy them anymore. Yeah, that one. Well, the Dodd-Frank Act was the Democrats' plan to try and make sure that never happened again. How did it do this? Well, the first part was making sure that we watched Wall Street closely. Dodd-Frank created a number of agencies and committees to keep an eye on Wall Street, the derivatives markets, credit rating agencies, and the large banks. For example, the Consumer Finance Protection Bureau is a watchdog agency for credit cards, mortgages, payday loans, and other financial products that can put people at risk for predatory and fraudulent behavior. One of the biggest changes was requiring banks to make sure people understood the terms of their loans. Whereas before the housing bubble, lenders would say, hey, here's a mortgage, only $1,000 a month, no interest, for 2 years. 2 years later, interest would kick in and payments would balloon like 200%. Yeah, no more of that. It also requires banks to verify borrowers' income, credit history, and job status. The second major piece of Dodd-Frank is its rules on how banks use their money. First, it changed capital requirements. That just means your bank usually has to have a certain amount of money on hand. Banks love to lend and invest money, and that's great, but no one wants to see a "sorry, try again tomorrow" sign on their ATM. And that's what happens in economic crises. Dodd-Frank also reined in what banks were able to do with what's called the Volcker Rule. The rule essentially stopped banks from gambling with people's money. Under the rule, banks could no longer use or own hedge funds for their own profit. They could only do so on the behalf of their customers. So they can't take your money and buy, say, a financial product full of people's mortgage debt, no matter how good the housing market is doing. That's important. I'm sure you can see, though, why some people on Wall Street and in Washington have a problem with this. Next week, the Senate will vote on whether or not to lift some of the mortgage regulations on small and regional banks. And they also may change some of those capital requirements we talked about for large banks as well. It may be surprising that there are 17 Democratic senators supporting this legislation, including the recently elected Doug Jones of Alabama, Debbie Stabenow from Michigan, and Virginia's Tim Kaine. Though, obviously, every Democrat isn't falling in line. Senator Elizabeth Warren is one of them.
Smaller banks can't afford those compliance regulations. So if you help those smaller banks and they were able to make loans to those forgotten Americans, couldn't there be a window here?
We have been offering for 3 years now a bill that would help the small banks and really make some significant changes for them. But that's not what this bill is. This bill offers a few changes for small banks, but the price of that is to sock consumers in the nose, to turn loose of banks between $50 billion and $250 billion, and to put in some special bonuses for the biggest banks in America. That makes no sense at all, and that ultimately puts the American economy at risk. You remember Countrywide, the bank? Oh, you remember. They were putting out at their peak 1 in every 5 mortgages across America. And you remember what those mortgages were like. You know, they were like grenades with the pins pulled out that they rolled into American homes, and that ultimately blew up the economy. How big was Countrywide at its peak when it was doing this? About $199 billion. So here's the deal. What this bill says is the next Countrywide that figures out a way to blow up the economy will be regulated the same way as if it were a tiny little bank. Light regulation, nobody takes a close look at them. Did we learn nothing from the crash of 2008? It's not just me saying this. The Congressional Budget Office yesterday put out a report saying that what this bill will do is it will increase the likelihood that American taxpayers will have to bail out the banks again. Now, they said it won't increase it a lot, but it will increase it. Why would we take that on at a time when the banks are more profitable than they have ever been before? And that's true, by the way, for community banks, regional banks, and for the giants.
Supporters of the changes blame Dodd-Frank for the increase in small bank closures around the country. They also argue that Dodd-Frank keeps those banks and people from being able to access capital that they could use to get a home or start a business. NPR News' Kelly Snell points to the fact that some of the support may be because Democrats in states where Trump won by huge margins are looking for a bipartisan win with November's election season coming around. And I think that's a good point. But I guess we'll have to see next week how much of the bill is an aid to small banks and how much trades our financial risk for a political brownie. Hey guys, thanks for watching our videos here at Dailyclout. My name's Iziah Thompson and I love having you here. If you really love the content, please subscribe to our YouTube channel, like us on Facebook, and also go to our website, dailyclout.io, and become a member. We have tons of great people on there and tons of great things happening. We're following legislation, people are talking about ideas, and we're really trying to bridge the gap between political sides and have a conversation that anyone can be a part of. So yeah, please join us and like the video too. That would be awesome. Thanks.